That was the Director General of World Trade Organization, Dr. Okunjo-Iweala, who also spoke at the meeting where we had Dr. Additional talking about barriers facing micro, medium, and small enterprises, and of course, how to overcome all of that to boost that sector. Well, it's now time for our AFEX segment. For the weekend at October 25th, there was a drop in the number of contracts traded on AFEX exchange. As usual, we have Michael Martins joining us from our Abuja studio to give us the details. Hello, Michael. Good morning.
Hi, Ine. Good morning. It's always a pleasure to be here.
Good to have you here, Michael. So we see that there was a 79% drop in the weekend, 25th of October. What happened? Give us details of what happened in the market.
So thank you very much, Ine. So just to give you a brief overview over what happened on the exchange in the week under consideration. I mean, if you look at the table in front of you, it sort of suggests that we had differing price movements across board depending on the metrics that you're looking at. Right. So if you look at the total value of transactions traded on the exchange in the week under consideration, the total value went up by 273.19%. From 22.64 million naira to close to trading week at 84.49 million naira. However, if you look at the number of contracts traded on the exchange, it fell by 79% from around 100, from more than a million contracts to trade 212,247 contracts. With regards to the number of deals traded on the exchange, we also saw a significant increase of 43.75% from 32 deals to close to trading week at 46 deals. The ACI, which is the AFEX Commodities Index, also remained unchanged at 427.34 points. And also the AFEX Export Index, which is the AEI, also remained unchanged at 168.08 points. With regards to the volume traded on the exchange the week under consideration, like I mentioned earlier, there was a 79% decline. And the major culprits were essentially maize, which fell from 1,201 contracts to trading no contracts this week. And then we also saw a significant decline with cocoa, which fell from 14,849 contracts to trading 2,147 contracts this week. With regards to price changes on the exchange, there was a general there were no changes across board, and the only changes that we saw were particularly green, speaking only to soybean, which went up by 11.12%, gaining 39 naira in the contract value to close the trading week at 319 naira. And I must say here, as we mentioned in previous weeks, the contracts have now been adjusted from 100 kilogram to 1 kilogram, hence why we now have 390 naira per contract. And then, of course, we had changes with cocoa, which went up by 8.99%, gaining 99.02 naira in the contract value to close the trading week at 1,200 naira per contract. So with regards to some of the major changes that we saw on the exchange, with regards to price, volume, and then general market summary, those are largely the changes that we saw on the exchange. And as we always say, if you want to know more about the commodities market, you can always go to our website, which is www.afexnigeria.com. And if you want to get started trading commodities, and I must say that this is probably the best period for you to get started trading commodities, you can always download our app, which is available on iOS and also on Android.
So it would be interesting to know, Michael, this harvest season, does it have a lot of impact on prices as is expected?
Yes, certainly. So it is the case that, as we have mentioned, multiple times during the course of this program, that the harvest season tends to cause a significant decline across all the commodities, whether or not you're talking about grains or whether or not you're even talking about export products. But it is the case that we haven't started significantly reporting on the new commodity prices for the new season yet, hence why you are still seeing a bit of a large price indication for some of the commodities traded on the exchange. Some of the surveys that we have seen from the open market, particularly for the commodity maize, which suggests that the price for this season would be starting around between 150,000 to 170,000 metric tons, which of course would be a significant decline from what the current price of maize is. So yes, the harvest does have a significant impact, on commodity prices when significant volume does enter into the market, as we are expecting, in the month of November and maybe even the early part of December, both for grains and then also for some of the export products traded on the exchange.
All right, let's see some other things happening in the exchange now. Just yesterday, AFEX crop production report was unveiled. The report highlights some critical projections and insights on consumption, production, trade, and prices for vital agricultural commodities in the 2021-2022 season. One of the report's significant findings is that there are early signs of inflation for key commodities, as there have been aggressive purchases from processors and large aggregators on both the open market and straight from the farm gate, regardless of moisture content. Now, this pattern may prevent steady decline in commodity prices after harvest. That's usually obtainable. So we're talking about food inflation now, which hit a 15-year high earlier this year. With early indications of inflation for some commodities prices, even upon harvest, is Nigeria on the verge of another year of high inflation?
Thank you very much, Ini, for that question. And I think in light of where we are as a country, and I think that's a very important question that needs to be answered. But one thing that we must take note of is the fact that inflation in and of itself is not just a Nigerian concern, right? It's also a global concern, right? So if you go to the United States, if you go to the UK, and even if you go to Europe, right, inflation does remain a significant concern. And maybe you could argue that a lot of that is due to the amount of money that has been pumped, into the global economy in a bid to mitigate the effects of COVID-19 crisis, either on supply chain or either on the supply chain or also on certain value chains for certain industries. But it is the case that inflation does currently remain, a significant concern across board, depending on across the entire global economy. I think the more important question, with regards to inflation right now, particularly from a global scale, is whether or not that inflation is either transitory, that is, it would only subsist for a short period of time, or whether or not that inflation would be permanent. I would go as far as to say that we can't say definitively now. Maybe when we get a whole lot more data with regards to how prices move or how prices, change in the year 2022, maybe we can then begin to, sort of speak to whether or not that inflation will be permanent or transitory, right? But if we are to look at the Nigerian scenario in and of itself, so take, for example, a commodity like maize. I had earlier mentioned, the fact that some of the price surveys that we have in the market does suggest that maize will start at around 15,000, to 150,000 to 170,000 naira per metric ton this season. Yes, that is almost significantly similar to the same price at which maize started off last season. But if you compare that with the prices that maize started with 2 or 3 years ago, the prices are up currently 40 to 50%. So you could argue that maybe maize as a commodity itself has sort of found a different price base, as in terms of starting point for that particular commodity. But even beyond that, right, I think for us as a country, a lot of the structural issues that currently bedevil the agricultural sector in terms of storage, in terms of production, in terms of even access to markets for most of the smallholder farmers and even largely some of the participants, within the country, a lot of those structural issues have not been solved yet. And even if they are not currently being solved at the scale, at which they would have a significant impact, on the commodities market and by extension inflation. Yes, you could argue that by virtue of our crop production survey, there will be a significant production this year in comparison to last year. But then whether or not that would help to mitigate the demand that we will inevitably see in the market, I don't think that is the case. And even if you look at just another macro indicator, which is the which is the exchange rate, which is sort of adjusted significantly over the course of this year alone, to around 560 or 570 naira per dollar, it does indicate that it would be significantly harder for processors and maybe some of these other companies to obtain these commodities any other way apart from the local market. So it is the case that we will have significant demand in the market this current commodity season. And by extension, I believe that inflation will remain a significant concern across board with, with regards to all the participants, in this current commodity trading season. Whether or not we're going to get one that is as high as a 15-year high, I'm not sure yet, but we will have to get more data next year to sort of conclude on that.
Well, you did mention that we expect a substantial production this year. Will that be enough to create food security for the next season?
No. No, absolutely not. Because and you have to think about this problem holistically, right? So on one hand, you have a production problem, which is to say we don't currently produce enough, to sort of meet the demand that currently exists in the market. That's a fundamental problem. But the more important issues that we currently face would maybe more aptly also be structural. So take, for example, storage. Storage as another issue. So yes, this year the central bank did come up with a strategic grain reserve, whereby they essentially aggregated a lot of commodities from the open market in a bid to mitigate, high price movement across board, particularly for the maize commodity. But the amount of volume that was aggregated in comparison to the total volume of production is minuscule, and you could say that that's a much bigger problem for us as a country with regards to food, food security, because as it stands, outside of us having a significant adverse weather condition, whether that's farming or whether that's flooding or whether that's some sort of adverse condition affecting the commodity market, we don't currently have enough of an infrastructure to store commodities in case that happens. So what that means is that if that kind of situation should materialize, we're essentially on our own, and we're essentially at a higher risk of food insecurity as a country. We should essentially see food prices skyrocket over the course of an entire commodity trading season. So as opposed to just even the production issue that we have within the country, I would argue that there are more structural issues that also need to be addressed in concert with the production issues if we are truly being serious about addressing the food security problems within the country.
So your survey also highlights the fact that majority of farmers in all commodities covered fall under the youthful age brackets. And this is opposed to general notion that the youths run away from agriculture. So how do we balance that? Have things changed, or did you have a segment? Was it a segment that was your focus?
Not exactly, and I think it's important to delineate here that even if we can argue that some of the farmers under our networks that participated in the survey do fall under the youth category, a lot of them would probably be due to the fact that due to legacy social systems. And what I mean by that is to say they're essentially farmers because their fathers were farmers, and their fathers were farmers because their grandfathers were farmers, right? So it isn't necessarily the case that a lot of people who were not previously in the agricultural sector are now moving extensively into the agricultural sector in hopes of having to create some sort of significant value across the entire value chain. And I think maybe the more important question with regards to youth participation in agriculture is this, right? Look, the problem has never been the age of the average smallholder farmer. The problem has always been the capacity, right, of the average smallholder farmer. And maybe you could argue that by and large, youths tend to have a larger capacity than people that are much older. To which I would say that maybe the significant value proposition to youths participating in the agricultural sector would be talent. That is, we then have a whole lot more brain thinking about how to solve some of the biggest problems within the agricultural sector, and then also innovation, right, within the sector, right? So we've talked about the fact that we need to increase production. For example, we've talked about the fact that we need to increase production as a country. If youths begin to participate more within that sector, maybe you could argue that we will then begin to see a whole lot more innovation across that in that particular value chain, whether that's with the introduction of new technology or whether that's also with the introduction of new machinery to sort of help boost that production. So I think in terms of youth participation, those are we need them to participate across the entire value chain, but more importantly at the production point, because that's essentially the beginning of any sort of productive activity within the agricultural value chain.
All right, and one more thing from your report, that the challenges of low access to finance, inputs, and improved seed, they're still there. It's been there for a while. Can you identify maybe specific policy direction or the role of private sector to solve some of these challenges?
So thank you very much. So to be honest, with regards to some of the specific policy directions that could help significantly solve some of these problems, a lot of that would have to come primarily from the from the government, but a lot of it would also be with regards to collaboration across, the major participants within the agricultural value chain. So in terms of specific policy directions, we can talk about that with regards to, the major sectors of the agricultural value chain. So take, for example, with regards to production, we do need significant credit risk guarantee because as it stands, extension of financing the agricultural sector is still significantly less, is still less than 5%. Whether that's due to the fact that capital market players essentially see the agricultural sector as a risky investment, or whether or not there isn't just enough data to help mitigate some of their fears and apprehensions about the agricultural sector, we don't know yet. But it is the case that if the government were to provide any sort of policy across the production value chain, credit risk guarantee would be one of them. Secondly, would also be, of course, as we have mentioned at different points in time, the provision of inputs, to smallholder farmers to just sort of help them boost their capacity. But that's just on one part of the value chain. Across all the other value chain, you could also talk about storage, with regards to the federal government building more storage facilities, or maybe better put operationalizing the current storage facilities that we currently have within the country. And then also with regards to some of the structural issues with regards to logistics, which is the movement of commodities from one place to another, the federal government can also help significantly solve in that regard. With regards to the role of private players, in addition to some of the work that AFEX has done within that sector, which would be input financing from the production side, which is the provision of storage as a service, from the infrastructure side, and then also from the market side, which will also be the provision of access to market, with regards to spot contracts and then also to derivative products, or rather, forward products that we have on the exchange. We do actually need a whole lot more private sector players to play across, the entire value chain of the agricultural sector. Yes, we do have some private players, but a lot of them are focused on the trading vis-a-vis the marketing part of the agricultural sector. But we do need a whole lot more of them playing within the production value chain. I believe that when we significantly solve that problem, I think we can then begin to see a lot more growth and development within the agricultural sector.
All right, Michael, thank you so much. A whole lot of information coming from you there. Now, I guess we have this information, but implementation of the information, action plan is actually what we need next. Thank you so much, Michael Martins, for sharing your thoughts with us. Enjoy the rest of your day.
Thank you very much.
We'll just take a breather. When we come back, we'll head to the markets.